Hey, what's going on, everyone? I hope you're all doing really well. So I'm going to get into my GU breakdown, as this is sort of a go-to setup for me, and it's very high probability, and understanding liquidity and when price is faking a breakout and when it's not, and what price is leaving behind for us to target in terms of liquidity as well. So I'm going to get straight into it. So GU hourly time frame. Now, firstly, this was the continuation leg that we was anticipating, and that's the trade that I took. So if we look to what happened prior, we had a push down here, and if we just zoom right in, we had a break of structure. So I'm going to mark it on. Okay, so a break of structure right there. Now, if you're brand new to the strategy, the reason that's a break of structure on that low there is because price came down. So we had a low, so a lower low, and then a lower high. So then price pulled back. We tapped into that up candle there. We then put in a new lower low. So we've broken that low there. So once we broke that low, this is the new lower low. And then the new lower high is here. And then we have the last up close candle, which is an order block. And as you can see, I've refined it down to that candle there because it didn't engulf the order block. And this candle here is when, we actually see some momentum. So that's the candle before the momentum. Okay, so this is the area that I'm looking to sell from if price comes back into, as you can see we did here. But if we look to see what happened next, we pushed down. So we had a lower low, but then we had a bullish candle, we pushed back up, and we did come into that order block with this wick here, but you can see we didn't come into the 50%, but we did still mitigate, a part of this order block before then putting in a new lower low. So this is important. So we had this as another break of structure. Okay, so because we put a lower low in here, we had a bullish candle up. We came into that order block ever so slightly, but then we can identify that as a pullback and then a new lower low with this move here. Okay, so if we was looking at that, I'm always saying to adapt with the most freshest sort of breaks of structure. So we could be looking at this as the last up close candle, refine down again to this candle, which is a large area, granted, but we can refine that down on a 15-minute time frame, and definitely look for entries here rather than waiting for this, because price doesn't need to. Once we had this second structure break here, price doesn't need to come up this far. It could sell off from this area here, and as you can see, we came in and we did sell off, but then we put in these two wicks, and we came down to test this low, but we didn't break it. So what's this leaving behind? Well, we can identify that as equal lows, because we have one low, price pushed off and came back to that low. So most people see that as a double bottom and they're looking to buy here, or a triple bottom. So you see 1, 2, price came back to it, people are buying here. Okay, so what does that mean? Well, it means liquidity, their stop losses are at this level here. So what's price going to do? It's going to target that area and grab liquidity and then potentially reverse back up. And you can see we took liquidity, then we had a nice momentum candle up because price had fuel to move up, but then we are seeing price sell off now. But yeah, if I get back to that, so I'm going to delete that off, and we did take trades in here, but I'm going to focus on what happened with price. So once we had this liquidity from the equal lows that was left, it's a very good target for us to look at for a future move. Okay, so the next thing to look at is this high here. Okay, so I'm going to mark it on. Now I'm trying to keep things simple and, you know, not overcomplicate things. That lower high is the most recent lower high if I come back to here, okay? So price pushed down, we had equal lows, then we pushed back up. Now for me, as this area here is unmitigated, you know, to the 50%, if price comes up above these highs, that is for me seeking liquidity, tapping into the supply zone / order block before continuing down. Okay, so this is one of my favorite setups where we can see clear liquidity, and we had this quite impulsive move here, but you can see we have this wick down, and you know, this is wicked both sides, and it's a seek of liquidity from these highs and mainly this lower high here. Okay, so people who are in sells or trading stop losses, price is seeking liquidity above that lower high, tapping into this unmitigated area, and you can see we mitigate to above the 50%, so that's probably around 75% of this order block, and then, you know, this is our sell zone where we can look for our entries. Okay, so dropping all the way down to the 1 minute time frame, we tap in, and I was looking for potential longs. So you're probably thinking, why are you looking for longs when we're in our sell zone? Now firstly, this purple zone is the hourly order block, as you know, you've just seen, but price does not need to sell from here unless we get confirmation that it wants to sell. So what that basically means is, you can see that once we came down here and we put in that equal low, we pushed off. Now this whole move here is still bullish on a lower time frame, so this time frame is still bullish. So you can see we had a break of structure here, okay, and we can just trade the order flow to, you know, the higher time frame areas. But if you're newer or more beginner to the strategy, I don't necessarily recommend doing this before you test it. But what we can see is, if we start here, we pushed up, we had a range, so you can see a little range there. We then broke up, which actually broke this most recent lower high. And then what you can see is, I'll just get on the fib, that range, we had a mitigation of that range. So basically, let me just zoom right in, keeping it simple. Push off, range, this is the move that caused the break of structure from there. Range, initiation out. So initiation basically means price has moved away, broke structure. Then next we're anticipating mitigation. So, you know, a fill of these orders, a close of orders, more orders being placed, and then finally continuation. So price continues and then break structure again. So that's the order you want to remember: range, initiation, mitigation, continuation. That's how the markets are moving all the time. So understand that and, you know, use it to your advantage. So that's one entry. You know, we got a mitigation, continuation. The next entry we're looking at is last down close candle, and you can take this whole sort of consolidation range or look at solely the order block refined to that candle there. Price tapped in and then respected and then continued. Okay, so there are two entries that you can take in the lower time frame order flow coming into a higher time frame sell zone. Okay, so overall we are bearish, but you know, the markets are fractal and we can take advantage of trades coming into and away from higher time frame POIs. It's just about learning it and back testing it. Okay, so the next area would be here, but this isn't really it's a break of structure, but it's sort of more of a efficient break. We have a bit of imbalance here, but price doesn't come back to that area, and the next area would be here. So this is a break of structure. And okay, so another thing to mention here, a really good tip. As you can see, we had a break of structure here, but we have this as the last down close candle, so that's the order block. But if we look to see the next 3 candles, they're within, well, this one went above slightly, but what you can see is the next 3 candles are pretty much within this order block. So when we get this, I'll usually be looking at this whole area, or them 3 candles as my sort of order block refinement, rather than looking at that candle there. But I will get more into that in a different video where we can focus solely on that. But yeah, that's a little tip and something that I've come to refine over the the last few months. But if we look at this area here, we can take this sort of area here as our order block before that momentum came in, and we could be looking at an entry around these areas, but price doesn't come back to it. And you can see I set an entry, and once we pushed off here, I did cancel it. Or it was around here I cancelled it because price came up to test that high, and then what we're doing now is just ranging, and ideally I wanted it to get tagged in around this move here, but then we pushed off. Okay, so another thing to note is we have this imbalance on this candle. Okay, so if you're not familiar with imbalances, basically it's when mix aren't meeting, sorry. So we can see from this candle to this candle, the high of this first candle is there, and the low of the third candle is here. So everything within that there is an imbalance because wicks aren't meeting. Okay, so you can see that is why price went up from here and didn't tap into the order block down here. Okay, so you can see price came back to rebalance that candle there, and then we went long, but ultimately we do start to sell off from here. So we can delete that off. And at this point here, we have this as our swing point. So that's the swing high. And then for me, that's the swing low there. You could argue it's here, but for me it's here because we pulled off and then we went from here. So I'm not looking for sells until we either put in a new higher high or we break this lower low. But that's quite a way off, and at this time here we need a bit of development, and all of these breaks within here is sub breaks. The reason it's sub breaks is because it's structure breaks within the swing points, which are here, as I've mentioned. Okay, so you can still take these breaks of structure, but you need to test it. We do have a break of structure here. It's not something that I would look at because it's just messy. We come back in, but it's not something I would take. So we break structure here, but it wasn't looking great. You could be looking at setting an entry, either this up close candle here or this wick. But I was waiting for something a bit clearer, which is what we got here. Okay, so just zoom right in. We broke structure, we pulled back, we pushed down, pulled back, and then broke structure with this move here. Okay, so I'm sure you can see, but we've broken that low there. So we put in a new lower low, and that's our new lower high. Last up close candle, but I did take these 2 candles here because the true momentum, let me just get that one right. So the true momentum came in on that candle there. So I'm taking the candle before and then that doji candle as well. And I did share this live also on my Instagram page as well, which you've probably seen. But I set my entry. Stop loss was 3.5, which is quite large for me really, but you know, we tapped back in, triggered into the trade there with that wick, and we then break structure. So you know, simple as that. Range, initiation, mitigation, and then the continuation, and that's as simple as really. Now if you're wondering why I didn't take this area up here, is because the move that caused the break of structure did not start from up here. We can identify this as a clear pullback and then price broke. So price does not need to come up here. And if we also look, we do have, you know, finer detail. We have this wick that came back into the order block. So it's, firstly, it's not really a valid order block, but we do have a wick that came back to rebalance any inefficiency that was left. But ultimately we had a pullback, then we broke structure. So, you know, that's the area that I want to be setting my entry and, you know, anticipating that mitigation and then continuation from there. Stop loss size just above the order block. I don't really feel the need to be having it anywhere up here, because that does not make sense. If price is going to go short, then price won't need to go above this area before continuing. So that's the reason behind that. The order block, just above the order block, is more than, you know, enough room. And yeah, so if I just run it forward, at this point I'm clearly at break even, just waiting for some structure to develop. Now obviously at this point I'm running around 8%. Now it comes to your own preference if you want to partial your trade or be more aggressive, but for me, I've back tested it. I'm waiting for, you know, structure to form before locking in profit basically. Okay, so we pull back deep, we do come into that wick here, and as we know, wicks are areas of interest on a lower time frame, or, you know, order blocks on a lower time frame. And last up close candles there, we tap into it. So this is what I'm thinking at the time. We've pushed in, so I'm anticipating a new low from here basically, which you can see we didn't quite get just yet, and we got it soon. Yeah, we put it in there. So at this point I'm running 11.2. I've moved my stop loss to that low there, or it was that low. I think it was just above this low here, because what I was expecting next is a push into that area, because that is an order block. So, you know, looking to see if price will come into that area, and it just fouled short of it. And then we put in a new lower low here, and I've moved to that lower high, and again I've moved to that lower high. So basically just following the structure and the most recent lower highs. Okay. And just run it forward now. So once we get deeper into the move, obviously I'm running decent profit, so I want to be more aggressive with my stop loss and, you know, lock in a bit more profit. And we pushed down here. So I was looking at this, we broke that structure there. Last up close candle, we came into it, mitigated, and then we put in a new lower low. And I'm just managing at these lower highs, and as we got down here, it was 6 p.m. and we put in a new lower low, and I was above that lower high there, and then it got tagged out for 12.8. Yeah, just below 13. And back to the 15-minute time frame. Remember what our target was, so the hourly actually. Our overall target was to, you know, here at this liquidity, and you can see price swept that out. So at this point here, once we've taken liquidity, I also want to be more aggressive, because as we've taken liquidity, it's likely price will now push up impulsively and pull back before either continuing or, continuing down. Okay, so back to the 15. So you can see that liquidity sweep from both sides. We have it here at the lower highs. We tap in with the wick into the hourly order block that was left unmitigated. We then push down. We take liquidity from the equal lows, and that's the trade. So the duration was a good few hours. Yeah, it was about 6-7 hours actually, for 12.8% of my account. So yeah, I just thought I'd go through that trade because I think it's a good key lesson to understand when the trend is changing and when it's not. You can see once liquidity is left behind, the markets will target it because they're always targeting liquidity, in order to move. So yeah, that's going to do it for the trade. Any questions you have, as always, let me know in Discord, and I hope you have a really good day.